All right, everybody, welcome back. So in this video, I'm going to walk you through what happens when you get assigned and you're in a spread. So I've been in a Verizon trade. This is the trade that I was in. I had the 60-65 put spread. This has been a trade that was underwater for a while, and we're coming into an earnings event, and someone put it to me. What does that mean? So when you enter into a spread, you sell a put and you buy a put. Well, as a buyer, you've got rights, and as a seller, you have obligations. When I sold the 65 put, I entered into a contract and I sold somebody the right to put stock to me at $65. Verizon today is trading at $57. Someone exercised their right and they put it to me, and I now own 100 shares of Verizon at $65. You can see from the size of this account that I cannot afford to buy the 65 strike 100 shares of stock. Tastyworks gives you 24 hours to resolve this situation. Now, I could just liquidate them at $57 and I would take an $800 loss right there. I don't want to do that. It's why I have a spread. Okay? The spread that I was in had a credit combination of, I believe, 236. So out of this entire spread, my max loss is going to be $500 minus $236. That's my max loss if I now exercise my right. So what does that mean? Well, I bought the 60 put here, and that means that I bought the right to put these stock to somebody at $60. So rather than selling them into the open market at 57, I can force the person who bought my put to buy my stock at $60. To do that, however, we have to reach out to the broker and let them know that we want to exercise our right. Okay, so someone put it to us, and now we're going to turn around and put it to somebody else. Keep in mind, if your account was big enough and you could afford to actually keep this stock, you could just turn around and start selling calls against the stock you now own. Unfortunately, however, I'm in a smaller account. I can't afford to keep these shares of stock. Another thing that you could do is you could liquidate them at 57 if you expected the market to continue to go down. Okay, and that way you could keep the put that you're in, and you could just hold on while the market continues to go down and let that put make you more money. I don't really have an expectation that Verizon's going to go down from here, so I don't like that option either. I don't like that choice either. So I'm going to get rid of my put and I'm going to put it to somebody. But to do that, like I said earlier, we've got to reach out to the broker. So here we are on the Tastyworks platform. You can see I'm not logged in, and I asked them a simple question. I need to exercise my right in an options trade. Can we do this through the chat, or do I need to call? And of course, they popped up with an automatic answer. They're talking about exercising a long option. In this scenario, we're going to explore, and they walk it through. So let's go down through there. We want to read more. How do I exercise my long options? That's what we need right there. And they're asking which one of these happened to us. So that's the one that we want to do. You want to click here again. And then I'm going to watch this video and I'll be back. All right, so we're back again. After having watched this video, let me walk you through the way that this is going to go. So in the video, it actually showed it in really great detail, and I would refer people over to Tastyworks to watch that video. What they're telling me that I need to do is go to the Positions tab, choose the shares that I'm going to get rid of, choose the put that I'm in, right-click, close position. You can see that it's offering me a credit for the trade. We want to choose the number that matches the put that we sold. So I would put in, $60. Now there's extra credit in this because there is extrinsic value, you can see right here the extrinsic value in this trade is $30. So instead of just getting the $6,000 for the shares of stock, I'm getting $6,000 plus the $30 in credit. A few minutes ago, this was at 25. So with Verizon moving up, it's actually getting credit in the trade due to the implied volatility. All right, so that's just the way that it goes. Maybe if Verizon was to gain more implied volatility, and or if the market was to sell off more, making this put more valuable, then I would get more credit in the trade. I have until the end of the day today to manage this position. So, the more credit I can get, the better. That's really what it comes down to. The more credit, the better. Okay, guys, so that's it right there. I hope that this demonstrates to you guys that, look, assignments are real. Obviously, I got assigned today early, but first of all, it's very rare. This is the first time that I've been assigned in a trade in over a year and a half, and I trade very, very frequent. Okay, so it's just very rare. Plus, it's really deep in the money, and we're 2 days away from an earnings event. Right? It's kind of the very definition of your maximum amount of risk that for assignment. When you're deep in the money, your chances of getting assigned go up. When you're near expiration, they go up. And when you're near an event, they go up. And I'm in the trifecta because I'm deep in the money, near earnings, and that's and I'm 2 days from expiration. Well, actually, this isn't this is 30 days from expiration, but yet I'm still assigned. So the trade is just as simple as that. I went to the positions tab. I chose the two things I'm trying to get rid of, and now I've got the trade that needs to be closed. I can just hit the button and send it in. Now keep in mind, I had credit in this trade all along. So even though it looks like a $500 loss here, it's not. It's not a 475 or a 470 loss either, because this $30 is going to go towards the credit I already had. Okay, and a $5 wide trade, I'm typically sitting somewhere around 250, and I'm actually sitting at 236. So my max loss in the trade was 270. With this extra $30, my max loss becomes 230. And that's not bad for a credit spread that absolutely failed. Getting the max loss, the first one out of 64 trades that we put on in a row, that's not bad. All right, and of course we've more than covered the profits that we've made out of these trades, because since I went live with this account, it's made $3,300, and now this is just one single loss, right? One single max loss. So there you go, guys. You now know how to do the trade, and I hope that alleviates some of your fears about trading in a spread.